Next, we are going to discuss about seventh topic, that is factors affecting capital structure. In this topic, we are going to discuss about two kinds of capitals. First one, fixed capital, and second, working capital. So let us discuss about first topic, fixed capital. What is fixed capital? Fixed capital refers to the capital or money that we invest in fixed assets. Fixed assets are tangible assets that cannot be easily converted into cash. For example, the money could be invested in plants, machinery, buildings, land, computers, and other devices. Next, factors affecting fixed capital requirement. There are 7 factors which are influencing on fixed capital. First one, nature of business. The amount of fixed capital required by a business depends on its nature and type of activities. Generally, manufacturing companies like automobile, textile, electronic equipments, transportation companies, and public utilities like water supply and electricity supply. For all these business activities, more contribution of fixed capital is required. Second, size of a business. Business can be either a large, medium, or small, but the size of a business is directly proportional to its fixed capital. There are few parameters evaluating the size of business, such as turnover of a business, total number of employees employed in a business, capital contribution to the business, and comparing market share of a business. All these are parameters of the size of a business. Third, scale of operation. The scale of operation depends upon the total amount of fixed capital held by a business unit. Generally, the scale of operations will be large if availability of fixed capital is small. Fourth, use of technology. The technology used or implemented by a business unit also affect its fixed capital requirement. Thus, modern technologies are innovative in nature. They are often costlier than traditional ones. Furthermore, skilled and professionally trained manpower is required to operate and maintain these technologies. Overall, this demands more fixed capital investment from a business. Fifth, type of product manufacture. The amount of fixed capital required also depends on the type of product manufactured. For example, if a company manufactures complex products like automobile, it will need more fixed capital. Suppose if a company manufactures simple products like paper, clips, it will need fewer amount of fixed capital. Sixth, scope of activities. The scope of business activities also determines its fixed capital. If scope of business is vast, it needs a higher fixed capital. For example, a company involves in a multiple activities like manufacturing, processing, and assembling usually needs a substantial amount of fixed capital. Similarly, if scope of business is limited, then it requires less fixed capital. 7th, method of acquiring assets. The required fixed capital also depends on the method used for acquiring of assets. For example, if a company gets its assets on a lease, loan, or rent basis, it will require less fixed capital. Suppose if company makes full payment initially, it will require more capital.